The S&P is moving up, the Nikkei is moving up, the DAX is struggling, gold is falling over, Brent is struggling as usual, and Bitcoin is trying to find its way up. Fellow traders, ladies and gentlemen, welcome to the live show. It's good to see you again. Today we're talking about relying on the charts. Really, the charts are not going to make you any money, and they don't have any predictive capabilities. All they can do is offer you a reasonably good opportunity to manage your risk, which is, while we're about it, risk, risk, risk. Don't forget, trading's risky. Most traders do lose money, and if you don't like risk, you probably shouldn't be trading. Just to bring that up, just thought I'd, throw that in there so that everybody knows. How's it, Shane? How's it going? And Shane's got his ads already, which is perfectly normal and perfectly standard. The day that you come onto the show, Shane, and there's no ads on your platform, that's the day something's wrong. Something's definitely gone wrong, or maybe you've just gone and bought the premium or something to that effect. I don't know. Blue Mango, how's it going? Good to see you there. Lovely to have you on board. So what's happening? What's going on in the markets? Well, the Nikkei stopped me out, to be quite fair. I actually did have a short on that, and guess what it did? It went the other way. That can happen. That does happen. As I said, Bitcoin is kind of flying to the upside. Look at that. It's broken its prior high and it's going up. But there is a little bit of correction. Come back to retest and off she goes. So that's looking rather positive. United States dollar, Japanese yen doing quite well. And then everybody's talking about the Canadian dollar. And there it goes. It's breaking to the upside. So there's a good chance that this is also going to go. But I think what we'll do here is just keep an eye on that high. That could be quite important. In fact, very important. What's going wrong with the United States dollar, South African rand? This really should be taking off now. It's bounced off the support and it's going up, but yeah, it's kind of sitting around doing nothing, isn't it? Okay, too cheap to pay. Blue Mango, you've sent me an email. Okay, I'll check it up. I'll see what's going on there. I don't know why I've missed it. Maybe it's got into the wrong. I'll check the. Sometimes these things get caught up in like junk mail and things like that by mistake. I'll just check up to see what's going on there. Hello, Henny. Good to see you. Silver trade happening now. Look, how's it great? Silver trade. Pretty much the reason I would rather trade gold is because gold's got more liquid in it. I don't mean that like for real. Melt them down and they're liquid anyway. No. What I mean is there's more liquidity in gold. There's more money in gold, so it's easier to trade. If I want to buy and sell it, there's definitely more to go there. But it depends how small your trade is, I suppose. But gold silver's a lot slower than gold when it comes to that. But I mean, if you want to trade with silver, where are we? There you go, silver. Not much different, not much going on there. Pretty much, you might as well be trading gold. What the heck? So yeah, I'd rather just trade one of the two because they tend to move around pretty close to each other. They're not far apart. So I'll just stay with the gold. Yeah. So, as I said before, charts are not going to make you money. Win rates are not going to make you money. So, this whole business of just relying on the charts is kind of a form of insanity that we've been taught. We've been taught to rely on the charts. We've been taught to go and only trade on the charts. The charts are going to make you all your money. And at the end of the day, all they do is provide you with a trade and an ability to manage your risk. We all know that the strategy is where your money is. If you want to trade gold, for example, at the moment, I'm just going to draw this in here. And if you want to use the charts to trade, there we go. It's going to come in here, take this money, and then go up, which is very much in confluence with that trend. Probably land somewhere close to that trend and then bounce up. So silver won't be far away from that. Silver will probably have a similar scenario where you get, let's just draw this in on silver. You're probably going to get silver somewhere down there. But pretty similar. It's got to come down into that and probably go off. There is a trend here as well that it's running along. So it's running along in a trend, so you can trade in the trend. By the way, guys, I've done a video for you guys, as per request, on the Fibonacci extensions while I'm working on it. What you're going to see tomorrow, probably the RSI, and then I'm working on the one for Monday, which is going to be the Fibonacci extensions. I'm not finished with that one yet. I'm doing a series on charting so that you guys can understand how to use the charts and how to use the systems. I might even do an Ichimoku sometime next week or in the future. But the reason I'm doing that is because you do need charts to trade. You can't throw them away. But if you rely on the charts to make your money, that's where the mistake comes in. You've got to have a strategy. You've got to have a business plan as to how you're going to make your money in the markets. And that's the important part. Nick, how's it, man? Charts give you the guts and the confidence to enter the market. What you do after that determines whether you make the money or not. And that's exactly the way it is, Nick. Exactly that. It gives you the guts and the confidence to take the trade. You know, everyone who takes a trade based on a chart, effectively, what are they doing? They're actually convincing themselves that they're right, convincing themselves that they've taken the right trade and that everything's going to go their way. Because nobody gets in the market to lose. Everybody gets in the market with the belief that they're going to win every single trade, and they don't. Now, the thing with the chart is you get in and you've convinced yourself 100% that this is a good trade, so you take this trade. So that's why it's so shocking when it actually goes against you. When it goes against you, you think, how did that happen? What went wrong there? But that's what the charts do for you. They give you the confidence to take the trade. But if you don't manage the trade, you don't have a plan centered around that trade, then obviously you're not going to make money on that trade. And the charts, as I've said before, it's not going to predict the future. It's not going to tell you where the trade's going to go. And what you forget is you're not trading against lines, you're not trading against maths, you're not trading against algos. Guess what? You're trading against human beings or with human beings. And those human beings have all got their own view on which way that trade's going to go. They got their own system, their own idea on how that trade's going to work out for them. So that's why it's a buy and seller market. You have buyers and you have sellers. You have people out there that want to buy and you have people out there that want to sell on the same product, but at different prices. And that's what creates a market. So when you want to buy, somebody else wants to sell. You have to ask yourself the question, why does that person want to sell to me? Well, it's because they believe it's a good time to sell. So you got to ask yourself the question, why do I believe it's a good time to buy? You know, who's right, him or you? 50-50 once again. Nobody believes me when I tell them the market's 50-50. But come on, let's be fair. Somebody wants to buy and somebody wants to sell, and clearly the market's 50-50. Ray says there's more long-term upside in the silver. Understand one thing, guys, and I noticed, and thanks for that, Grace, saying that, you know, there's more long-term upside in silver. Understand one thing about commodities, all commodities, every commodity, whether it's gold, silver, copper, palladium, platinum, whatever. All commodities are what we call cyclical. What I mean by cyclical is they trade in a range over time. In other words, they go up and they go down. They go up and they go down. They go up and they go down. They are not like shares or indexes where they go up in a straight line and keep on going up forever. They don't do that. Commodities have a cycle. They go up and down. They might move up slightly with inflation. I mean, we get that. I mean, the gold can't be $1 forever. Eventually, it has to be worth $3,000 simply because of inflation. But that doesn't mean its value has grown. If you were to take a value chart, it'll be pretty flat. Effectively, all commodities and all commodity type mines and things like that tend to be very cyclical. They tend to stay in a cycle. So growth, they are not growth investments or anything to that effect. If you had invested in gold or silver when the S&P started out, you would still have the same amount of money, whereas if you invested in the S&P, you'd be very wealthy. So there is a big difference. There is a big difference. So when you're trading commodities, understand one thing. You're trading like Forex. It's the same as Forex. You're trading it. It's cyclical. It goes up and down. It doesn't just go up. It's not an investment. Now, the big thing about, for example, a lot of my friends come out and they say, I'm going to go and buy gold. I'm buying gold. I'm going to go buy gold because the world is ending. Something to that effect. It's usually because the world's ending. Guy standing on the street corner with that board over, you know, and he's like, the end of the world is nigh. You know, that one, yeah. And then they all buy gold and they stick it in their pub or in their lounge or in their safe or whatever the case. You know, it's very expensive to buy gold that way because of the fees involved in buying and selling it. It's insane. Much better to buy it on the market. Sorry, guys, it is Coffee with Rob. By the way, but anyway, buying gold like that or silver or anything to that effect is insanely expensive. And then they buy these commodities. But at the end of the day, when you go to sell it, you're not really gaining anything, because if you take inflation into account, you would have been better off if you'd bought yourself a property and sold it in a decent area. So just think about that, guys. That's why when I invest, I buy shares. I buy shares, and it's time in the market. As I tell you guys, timing the market is nearly impossible. You can't just time the market. Time the market. How do you time the market? By looking at a chart and saying, at that point, I'm going to buy it, and then we're going to make money on it. And nobody can really time the market, and charts can't really predict the future, but we use charts. Obviously, that's what we do. And if you've got an idea how to use them, and you use the price action, and you follow some of the things that I do, you probably have a decent success rate at it. But by the same token, it's not the charts that make you the money. Just bear that in mind when you are trading. This is our Brent crude oil trade, which is, it's never going anywhere, is it? But our stop loss is down here. Our take profit is up there. And if this plays out, our risk to reward is pretty reasonable, isn't it? Hi, great to see you. Yeah, Gray, I do undermine the charts, because charts don't have any predictive capability, but you do need them. You do need them. I don't undermine them in such a sense that I'll say you don't need them. You need the charts to trade. You need the charts to take your trade, to position yourself, to manage your trade. Imagine just using the numbers. That would be pretty tricky, isn't it? So much better to have a chart to work with, and you have a resistance, and you have a support area, and you have your trends and your breakouts and your counter trends. You know, the three ways we trade. We trade with a trend, we trade in a range, and we counter trade. I mean, that basic stuff, easy, keep it simple. But if you believe that the charts are going to make you money, or that a win rate is going to make you money, then you're fooling yourself. And you have to get that aha moment and get past that, and understand that you need a strategy to make the money. The charts will give you the opportunity, but they don't have a crystal ball, and they can't, give you that extra little bit. Charts give us breakouts, but let's look at the wrong variables. Greetings from Malaysia. Thanks, honey. Great to be here. Nick, I watched a podcast today where some guy channel that scalping retro charts was the answer. Renko charts, Renko. Renko, see what you get with that is you don't see all these moves, you don't see all these tails, it smooths it out, right? And that's actually a problem. I want to see when things are changing. I want to see when the buyers and sellers are coming in the market. I don't want a line that's been drawn in there of some sort that's somehow gonna make you money. But charts cannot make you money. Imagine how many times have I said you get a win rate, right? So you've got this insane win rate. You win 7 trades out of 10. You can go around and tell your whole family, I'm winning 7 trades out of 10. I'm an absolute genius. How much did you win on the 7 trades, Rob? $700. How much did you lose? Oh, 1,000. Oops. Yeah, on the 8th trade, I lost 1,000, and the 7 trades before that, I made 700. Well, I've got a win rate. No, guys, no. Understand one thing. To win in the markets, you need a strategy and you need a business plan. You need to know, and you need to keep the risk the same. You need to work on the risk. That's how you're going to make money. Risk to reward. You've got to make more on your wins and lose less on your losses. That's the only way you can win. And the reason that aha moment came to me, and it took me many years, so there's nothing wrong. I mean, all of you guys that disagree with me and think that charts make you money, I'm happy with that, because I totally understand it. I spent 10 years of my life believing that before I got the aha moment, and I've been doing this for 33 years. And I suddenly realized, now hang on a minute, because the old men kept saying to me, the pros in the market. I mean, I knew some pros that, big investments, big money and that sort of thing. And they kept saying to me, Rob, it's not timing the market, it's time in the market. And I used to think, are you insane? I don't have time to wait for the money. I need the money now, man. I need it now. I can't wait for 30 years. Are you insane? And then they kept on beating this into my head. It's time in the market, time in the market, time in the market. So eventually I sort of said, okay, it's time in the market. I mean, you guys keep beating it into my head. And I had my investment account opened, and I started just investing and leaving that and whatnot. But I still thought, but on the trading, how can this work on the trading? If they keep telling me I can't time the market, then how am I going to make money in the market? How is it possible? If I can't figure out how to time the market, there's just no way I can make money. And then there was all these guys out there telling you, nah, just use this system, or just use that system, or just use this fandangled system, or just wait till the moon moves 3 degrees to the left and then turns a little bit green and moves up a couple of degrees and then take a trade, or, all this rubbish. And, I went through all those thinking there must be one out there that can time the market. And then it hit me, boom, hang on a minute. There's no timing the market. You can't time the market, but you can manage the market. You can manage the trade. You can manage the risk, and you can manage the profits. And if you do that, then it doesn't matter where you pick the trade. In fact, none of these lines that you've got on the charts here, none of these lines, you can take any one of these. It doesn't matter. None of these lines matter. You can just take them all off and have a blank chart and just toss a coin and decide which way the market goes. But then you're not going to feel confident about your trade. You're not going to feel like you got the right trade. And it is going to make it slightly more difficult for you to manage it, because where you're going to put your risk and where you're going to put your take profit. So to give you guys an idea of how irrelevant the charts are, I'm doing a series on charts on the different indicators for you. So we've done price action over and over again. I've showed you guys how you need to trade. But now I'm just going to show you that you could trade with the RSI. You could trade with Fibonacci. You could trade with the Ichimoku. You could trade with a moving average crossover. You can trade with MACD. Thing is, they can all give you a different result. Now, just to give you the irrelevance of it, so I can show you that all of these systems, every single one of them, will give you the confidence to trade. And it will give you the ability to manage your risk and make the money. But none of them are guaranteed to make you the money. And that's why I'm doing this series on that. This trade, I've been trading for 33 years and I go short on it. What does it do? It goes long, it breaks out. So what's the only way I can manage this trade? By having a stop loss in place, which was taken out, and trade is managed. So that's one loss out of a number of trades. And you have to accept that. You could lose 10 in a row. It's unusual, but you could. You have to understand that that is something that happens in the market. You can't win them all. You just can't. But most of my profits on trading are made on just a few trades in a year, the big ones. And then the rest are made on some of the trades, or most of the trades that have made profit, which have made the profit target, which is usually more than the loss, which is pretty good. And there's a large percentage of those. But 60 to 70% of the trades are a mishmash of losses and small wins. And they don't really make you the profit at the end of the day. You have to understand, you're probably going to lose more than you win. It's just how nature works. And if you can manage it, you'll be okay. Win rates don't make you money. Win rates are scalping. They're not managed. And yeah, anyone can do that. There are people out there that are very fortunate and very lucky, and their trading seems to work out for them. Some of the guys that have systems that designed for themselves that you try to copy, you can't copy those systems because they are so complicated. And a lot of these guys, what they do is they'll go and spend an insane amount of time going back on all the information for years, working out if that might work on that particular instrument, and then trade according to that system. There's no way you can copy that because they change it on a regular basis. What I do for you guys is I show you how to keep it simple with price action. I'll show you how to keep it as simple as possible. Just use the support and resistance. Just use the trend, use the counter trend, use the range, and just trade with that. And then just use a strategy. And then you don't have to get super complicated and do tons and tons and tons of homework like a grade 1 school child. You can just trade and make money. So much easier. As I've said to you guys before, trading's charts are not here to make you the money. It's not going to happen. I mean, there'll be guys that have sat and they've studied the S&P 500 till they're blue in the face, and they're going to come on, they're going to show you how to trade some kind of system, but they're going to be changing that on a regular basis because they're going to be continually studying what's happening with that product, and it's an ever-evolving market. Whereas if you just keep it simple with your trending, with your ranging, with your counter trending, you'll be okay. You'll figure your way through it. You definitely will. And then if you want to add these other indicators in, just do yourself a favor. I am going to do this this series of videos on these different systems that are out there and available for you guys. But don't do me a favor and don't start putting them all on your charts, because if you put them all together, you're going to start trading against yourself, because they do differ. They all work, but in a different, it's just the way to manage your trade. And then if you now go and start deciding I'm going to use the moving average crossover system or the RSI system rather than price action, if you start using them together, they sometimes start to become a problem. In some cases not, like for example, the RSI, I actually myself will sometimes go back on an RSI just to see if a trade is valid or not. So nothing wrong with that. That's actually quite fair. Just looking at this United States dollar, Canadian dollar, not too bad. Let's go and take a look at the VIX and the Dixie while we're here. I'm going to take a look at that now. Just give me a sec. Blue Mango says, "I want my opinion, Renko is a waste of time." Well, it totally is. I mean, and there's the CPI report release. The CPI report, I used to love the CPI report. I don't even bother with it anymore. I used to love it, though. I used to wait for it every week. It'll probably cause some volatility. Okay. Jam 4, 5, 6, 7, 8. Long shot. S&P 500, 6647. Do you know what my feeling is, Shane? On S&P 500, I'm not too worried about the Nikkei at the moment, but what my feeling on this is, I've said to you guys, 6600 definitely going to hit this year. It's so close to it now, it should. But I've got this gut feeling, this insane gut feeling that it's not going to go to 7,000, that it's going to correct. I got this gut feeling that something's brewing in the background, something's bubbling up, and it's in the back of my mind all the time. And you know why that is? It's not because I'm psychic. It's because I have been doing this for so long that there's like little memory things in your brain that sort of pick up something from the past, and they're like, this has happened somewhere before. And I just look at the markets and I think, the gut feeling is I don't want to be too long here. I want to be sort of cautious. I just get the feeling that this is going to hurt. Something's up. Something's not. I'm not comfortable. Let's put it that way. So I'm trading what I see. Watch the stop losses very close. Keep an eye on the market. I just got this nasty little feeling that things are going to go slightly pear-shaped. 4, 5, 6, 7, 8. All the way up there. That's quite a quite a run. Okay, yeah. I presume you're using fib extensions for that. But yeah, actually, let's do it without fib extensions and see where it comes out. And if I was to do it without fib extensions, yes, you're quite right. It would come out up there, which is quite good. But I just wanted to have a quick look at. Let's just go over here to the news area. So we're in the news area. Hope you guys can all see the news area. High stakes CPI inflation report is on deck. What to watch, which is what Nick just mentioned a moment ago. I spent my life waiting for CPI inflation reports, waiting for jobs figures, non-farm payrolls. And I tell you what, but yeah, it will cause some volatility. It always does. It's common that it does that. So here's the Dixie, guys, the US dollar. And as I said to you the other day, if this continues on down, we're looking at a commodity super cycle, in which case your silver and gold and that sort of thing would go flying up. But it looks to me like this 50-day moving average, which is on the dollar, is turning around and starting to move back up again, in which case, and the 200-day moving average is sort of dropping closer to it, probably cross over and start going back the other way again. I was a bit concerned that the dollar was going to crash all the way down, which would have left us with some concerns in the market. But as we stand at the moment, because a commodity super cycle is not great news, it also means that the markets could crash. But I think we might be saved with this. I think if this turns around and does start to go back up, I think normality will set in. But that said, I still have a horrible gut feeling about this. So the VIX, if you can trade it, good time to buy it. I think buy into it and hold and wait for that spike. There's no volatility. Everything's standing still. If you look at this, it's just like quietly nestling around here, nothing happening. Yeah, That's coming. That's coming as well, which is why I mentioned that gut feel. You know, there's normally a bit of a gap between them, and there's the gap. And yeah, there was a move there. I think if it moves above this level here, if we start to get movement here, it's probably gonna spike. So keep your eyes on that as well. Americans don't buy Trump's message on inflation. Well, who does? Interesting one. Interesting one. Okay, let's go back to the charts. I was just having a quick look there just to see what's going on, what's happening, and what we're all about. Recently started selling puts on the VIX. There you go. The VIX is not available to everyone, by the way. So there is an exchange traded fund available. I think it's called UVIX or something like that. And then IG's got a VIX and one or two others, but most brokers don't actually give you the VIX to trade. Insiders have been selling their stocks at extremely high rates. Noted, Nick, noted. Yeah, like I say, there's something going on. Hello there. So I'm learning some basics, and I have a question for you. Saw a few vids where they don't use stop losses. What's your opinion of, if may I ask? Okay, so for that question, what's your opinion of not using stop loss? I think most of the people that are on the show here in the A team will know my answer. But I'm going to go over the answer just quickly anyway. And here's the problem, guys. If you don't use stop loss, you're going to lose everything. And not because you don't have a stop loss. It's got nothing to do with the fact that you don't have a stop loss. What it has to do with is the fact that you don't have a plan. If you don't have a stop loss, you probably don't have a strategy, and you probably don't have a plan. You are most probably trading on the charts and hoping that the charts are going to make you money. And you've mentioned that you're new to trading, so that is very forgivable because, I mean, we all go through this process of believing that charts are going to make us money when they're not. They're not. They're going to give you an opportunity to trade, but they're not going to make you money. So what you have to learn to do, let's say this trade here, you can see I've put the green here and the red there. This was a trade that I decided I'm going to take it short. This is a losing trade. Take it short with a view to making a profit down here and my stop loss. And now my stop loss is the same on every single trade. Not the same rand value on every single account, but if I have a $25,000 account, I'm going to risk $250 on every single trade. Why am I doing that? Because if I change the risk amount, then I'm just defeating the object because I never know how much money I'm going to lose, do I? Now I have a finite amount of money that I can lose on every single trade. I choose where the stop loss is going to be based on an invalidation. In other words, if the trade gets there, it's invalid. I can get out of the trade early and take less of a loss if I want to. That's fine. If you feel like the trade's died, you can get out of it early. And then your profit needs to be much more than what you're losing. In other words, just more than $250. I'm not going to tell you it has to be 2 to 1 or 3 to 1 or 10 to 1. It just has to be more than $250. Otherwise, you're wasting your time. So there's no point in risking $250 to make $50, is there? You're totally wasting everyone's time. So you want to be making more. Now you hit a losing trade like this. You don't have a stop loss in place. You don't know how much money you're losing. And suddenly it goes, as Shane predicted, to 45,600 up here. Look how high that is. Look where it goes. Suddenly you're losing a rather large amount of income. And now you don't know where to get out. You bought into this trade. You start dollar cost averaging it. You start making it worse. And you start losing more and more and more money on this one trade. And you don't want to be doing that. So what you do is you put your stop loss there. At that point, the trade's invalid. It's going long. We can see this is bullish. It's going long. It might come back into this and then carry on up. But now we can see that this has now gone past the prior high and it's going long. Let it take out the stop loss. That's a trade. Put it aside. You've got a plan. You've lost that one, but you're going to win another 5 or 6. It doesn't matter. You want to make big money on a couple of trades and let the little ones go. if you don't have a plan, and you don't have stop loss, and you don't manage your risk, you are going to lose your money, and you are going to lose your accounts. Simple. And mark my words, you can come back to me at a later stage and say, Rob, rubbish, look, I trade without stop loss and I make millions. Great stuff, I hope you do. But most people come back and say, well, you actually should have managed my stop loss. I didn't want to listen when I was younger. Believe me, I didn't want to listen to anyone when they told me to have a stop loss. They all said, Rob, you got to have a stop loss. And I was like, are you nuts? Why would I do that? Yeah, wish I'd listened then. But anyway, it's all fine. I eventually figured it out. And it went well. Very well. So once you figure it out, it goes very well. But when you're new to trading, I know you get caught up in all the flashy lines, all the little indicators, all the little things. And I know. I've been there. I've done that. All the fancy screens on the wall, all the little goodies and all the rest of it. I know. We've all been there. And all the guys telling you can take $1,000 and turn it into $1 million. Just think of this for a moment. If you have a sum of money, let's say it's $100,000. That's a huge sum of money. $100,000. Okay, you've got $100,000. Where can you go? And in 12 months, turn that into $1 million. Where can you go? Where are you going to go and do that? Probably nowhere. And just so you know, that includes the stock market. So why do people think that you can take $1,000, get into the market, and it's going to be worth $100,000 by the end of the year? Because just work out the percentage on that. It's impossible, near impossible, unless you are one of the luckiest men in the world or woman in the world. Perhaps you're one of these Irish, I don't know, what do you call these little guys with the green or whatever? I don't know, but you're pretty much going to have to do that. Now, I've seen some seasoned traders and pros try this out. Try this challenge where you take $1,000 and then next trade you double it up, next trade you double it up. Because theoretically, it's possible to take 10 trades and turn $1,000 into $1 million. Did you know that? Trouble is, all of them, every single person that's tried this, normally fails roundabout by the 5th or 6th trade. Doesn't that make sense since trading's 50-50? If you're lucky enough to win 5 or 6 trades in a row, pretty much sure you're going to lose the 7th one. Because you must remember, to make that work as well, you've got to be targeting your full target like we are. You've got to be targeting this is not scalping if you're doing that. You're targeting a full target, 2-to-1 risk ratio to do that. And yeah, it's a 50-50 trade. The possibility of it working is, well, you have to be one of those very, very lucky people. I don't think anyone's ever succeeded with it. Okay. Options trading. I nearly started selling. I like options for certain trades. If you can get in my favor and the trade looks good, I will sell some options. It's a pleasure. I hope the answer helps you. And always remember my answers, no matter how good or bad you feel about them, no worries, you know what I mean? It's just so that you guys can get some insight into the trades. And I'm also, just remember, I'm never being arrogant or anything like that. I'm just trying to tell you guys how it is. I've struggled with puts. I'm collecting info. Thanks for sharing. Makes sense. Hi, Sir Lunchalot. And hey, Sir Lunchalot. Hello. Good to have you. Good to have you. Sir Lunchalot is back. Always good. How's your trading going, Sir Lunchalot? Is it good? Going well, I hope. Hopefully it's improving immensely and doing extremely well. That's what we need to hear. So what do you guys think of the videos which I'm going to do that surround charts a little bit more for the time being? Is that what you prefer? I'm always wondering, what you guys need more from me. as far as information goes. So, you know, I'm trying to find the happy spot for you. And if the charting series is something that you guys like, then I'll go that route. If you want something different, let me know. Let me know, you know. Because at the end of the day, it's for you guys more than it is for me. Well, I do have my selfish reasons for doing this, and that is obviously I like being around you guys. I like making the videos. I enjoy myself. It's fun. It's almost as much fun as trading, to be fair. For me, anyway. For other people, it wouldn't be. But I do enjoy it. Okay, so you guys like the idea, yeah. US dollar is reaching to news right now, and less indicators, all price action. Okay. All right. The only reason I did a couple of indicators is because the guys did ask, and it's not a bad idea to know how to work with, for example, the RSI or Fibonacci. And Shane, you'll enjoy that. And but maybe I'll leave out the other ones and then just stay with what we know. Yeah. Okay. We'll see. Sounds fair to me. Gold. Gold seems to be on the move here. Coral here. See the high coral. Okay, so I just want to check the email as well because Blue Mango sent an email. So I just want to quickly check if I can see your email and quickly sort it out for you right here while we're together, while we're on the show. Because that'll be helpful, won't it? I'll just see if it'll open, if it'll ever open. Sometimes these things go a little bit slow. No, that gold is on the move. So as CPI released, something must be going. Let's just see. What's the time? Oh, yeah, I don't know. It is news time, yeah. It's news time. News time here is normally always around 2:30. Or it always was. That's when all the news comes out. And you can see a little bit of volatility going on in the market. It's not boding well for oil, is it? Okay. That's sending me down the United States dollar, Japanese yen. Interesting. And there goes the Canadian dollar. There goes the United States dollar, Canadian dollar. It's going the other way, right? So obviously the news has affected it that way, which has affected gold, which is going up to the upside. So it's bouncing early because of that news. Let it settle, see what it does. US dollar, CNH. CPI report volatility made about 100 Renko candles in 2 minutes. Wow. Okay. Let's have a look at the US dollar CNH. I'm going to take this Japanese yen one off. US dollar CNH. I can find it, yeah. Always find it. I'm going to look for it, yeah. US dollar CAD, CHF, JPY. There we are. Oh, that doesn't look good. Let me do this. Do that again. Okay, US dollar CNH. Let's have a look at it and see. Let's see what we got here. Inflation rate year on year. You want to buy it. Well, that's quite interesting. Let's see. You want to buy the US dollar CNH? I'm just going to do a couple of simple things here. Nothing complicated at all. Nothing complicated at all. Doesn't seem to be much. There's a US dollar CNH. I'm also going to just put in a level there, purely out of interest. Just drawing this chart up very quickly. Prior high. Okay, so you are resting on a kind of support, but you are in a bearish trend. It is going down. Let's just have a look at this on the day. It's bearish. Let's just have a look at this on the week. You know, it would be lovely to get a better chart than that. Try that again. And that does look bearish on the week. Looks very bearish. Yeah, US dollar CNH, bearish. I would wait. I wouldn't preempt this one at all. I'd actually look for it to surpass a high. I'd wait for it to break structure. No, I wouldn't go long on that. No, not for me. And it's also in the middle. It's really not doing much. Okay, let's see, Barrow, good time to catch retracement. Core inflation rate year on year. Yeah, I'm not expecting much from that. Inflation rates. Donald Trump was saying there's no inflation. Inflation's fine. Everything's fine. There's no inflation. You know, from what I've seen, and you know, living outside of America is actually quite interesting because I spent all my life in Africa, and particularly here in South Africa, I've watched inflation go through the ceiling, particularly in the last 30 or 40 years, in such a way that it's just gone completely insane. So I've seen how fast inflation took us over, but overseas, I was looking at the UK and looking at the USA, their inflation just seemed to be really low, and it seemed to always stay in the same place. Things always seemed to pretty much cost the same, going up a little bit, but nothing serious. But in the last 5 years, I've been seeing in the USA and the UK this sudden, if I was to look at a chart, it would be like a sudden increase, a sudden shoot to the upside. Almost like what 2,000 pounds or dollars would have been worth 5 years ago is suddenly now 4,000. And that's the kind of inflation we've been facing here in South Africa for years. But suddenly you guys haven't seen this before, and suddenly this has happened overseas. You can clearly see it in the S&P 500 as well. I mean, if you look at the S&P 500, 5 years ago, the S&P 500, I think it might have been below 2,000. Look at it now. Look where it is. Look how quickly it's got up here. Actually, I'm wrong. It did go up to 4,000 5 years ago, and it went back to 3,500. So around 3,500. But now it's a 6,500. This isn't just based on it did so well, or the shares did so well that they doubled in value in 5 years. This is inflation. Inflation has pushed these prices so high. So this is something that America and the UK and Europe hasn't seen before for a long time. And I've been seeing it for years on this side and wondering why it was so good over there, why it was so slow, why it wasn't running so fast. And now I've been seeing it run fast for the last few years. And it could continue. And if it continues, it could get really serious. You know, you guys in America, you guys have a great scenario of a 3% unemployment rate. Do you know that in South Africa we have like a 60%, 68% unemployment rate, which is not registered, by the way. They tell you it's like 30% or something, and even that's like acceptable. But it's really way over 60% unemployment rate in this country. And we find that acceptable, and we find that perfectly normal. Whereas if you go to 5% in the USA, it's a national disaster. You guys declare the end of the world. It's crazy when you think about it. But yeah, there's a big difference, guys. A really big difference that you guys haven't lived. And when you live on this side, you see it from the outside. You see it more clearly, and inflation's going to hurt. And Donald Trump stands there and says, "Oh, there's no inflation." Well, there really is inflation. There really is. Yeah, as Nick says, strip away real inflation, and the stock market's gone nowhere. And that's effectively pretty close. Pretty close. I see you have images blocked. I was going to paste the silver setup. Do I have images blocked? I'm so sorry, Gray and everybody else, but to be fair, I actually don't know how to unblock that. I didn't even know that that was blocked. I'll have to do some research. My apologies, Gray. You're more than welcome to email me an image and I'll have a look at it. But as I say, as I stand at the moment, I actually don't know. And I'm no expert on that front. So yeah, you're more than welcome to email it to me, newmarketsSX@gmail.com. Terribly sorry about that. I don't deliberately have these things blocked or anything like that. As I say, I don't even know about that side of the business. I didn't even know you could do that. Boom, boom. You know, the reason I've missed Blue Mango's email is most likely because I get so many millions of spam emails. But let me just have a look here. I'm just trying to see if I can see your email. Boom, boom, boom. I don't see it. Let me just have a look under social dom. Is it under maybe junk or something like that? Spam. Let's see. Okay, no, it's not there. So what I'm going to do here, particularly for Blue Mango, because he said he sent me an email earlier in the week and I didn't get it. I'm just going to write here. I think that should be. I'll get an email back. There you go, guys. If you want to send me an email, there you go. Okay. There you go. newmarketsSX@gmail.com. Study homework, fill up silver chart. 20 and 200 EMA, these two indicators. Silver guy. Silver guy, it's all good. No, Blue Mango also wanted to send me an email earlier in the week because he wanted Shane's email. And okay, give it another try. Give it another try, Blue Mango, and I'll have another look. It obviously didn't come through for some other reason. I don't see it there. I don't know why. I looked under spam, junk, everything. I don't see it there. Just give it another shot and see if it comes through. Maybe there's a digit out or something. Just check. You can post it, Shane. You can post it. If you don't mind, you can post it. Just make sure it's not an important email. Just, yeah. Shane's ads. He gets silence when he gets ads. He'll tell me when he's back. But yes. Yes, yeah. Okay. Blue Mango will send it again, but Shane, you can post your email if you want to. I don't mind. It's fine. All good. All good. Nothing wrong. Maybe I'll just type here. In case Shane can't hear me. Yes, post it. There you go. That'll work. Perhaps. Don't know. But for some other reason, Blue Mango's email didn't come through. Just check if there isn't an extra S or something crazy. Sometimes people get mixed up with that. And see if it comes through. That'll be helpful. So has this market settled? Yeah, it's starting to settle back again. You must just look after your own thoughts, you know, like if you want your stuff to be public and things like that. I don't mind. It doesn't bother me. The only thing that I wouldn't have on my live shows is somebody advertising something on the chat or, you know, stuff like that, or trying to scam people or advertise some product or whatever the case. That's not on. But yeah, if you want to chat to each other and we're a group and we're fine and we're doing what we are like normal, then obviously that's fine. Absolutely. And David says he's looking forward to the video, so I'm glad. So I have completed the RSI video, which will come out tomorrow. I'm working on the FIB video, which will probably in all likelihood come out Monday. And then I'll see what to do for the next one. Maybe I'll just stick with the price action for you guys. I just want you guys to know what charting is all about at the end of the day. We all know that charts don't make you the money, but at least it's good to know how to use them. There's absolutely nothing wrong with that at the end of the day. It's handy to know how to use the charts. And tell me, Gray, Silver Guy, Gray. I don't know. I hope that's your real name, Gray. But do you trade anything other than silver? Do you only trade silver? It's interesting to know, because I'm a firm believer in trading everything. If there's orange peels or lemon peels to be traded, trade it. So I'm always intrigued by traders who trade only one product or maybe two or three. I suppose if you're trading on 5-minute, 1-minute charts, that's important. You know, it's difficult to trade more than a few. But if you're swing trading, I think it's good to have choice, lots of choice. So in other words, I would trade silver if there was a trade and there wasn't a trade on gold or something like that. I would look at it, of course. Of course I would look at it. The reason silver has crazy spreads, Blue Mango, is exactly what I said in the beginning when Gray mentioned that you trade silver and I said I'd rather trade gold, is because of liquidity. There's less liquidity on it. So if you're a bigger trader, you see there's been many occasions in my trading career where I've been trading rather large sums of money or investing rather large sums of money. I'm not scratching my head. I'm just telling you that particularly with shares more than anything else, you want to buy a share and you just can't find the liquidity because you want to buy too many shares. You know, you want to buy 100,000 shares in a company and they're just not for sale. You know, that can become a problem when you want to sell again. So when you're sitting with that stock and you want to get rid of it, sometimes you can't get rid of it. I've had situations where I'm trying to sell shares and I'm sitting on it and the price is dropping and I'm sitting on it and no one's buying it. And there's just a few going here and there and a few going here and there, and it's just not happening. So that's why I tend to stay away in shares. For example, I stay away from penny shares. I don't touch them because when it comes down to it and you want to try and get out of it, you could be in a lot of trouble. So no, I stay away from penny shares and I stay away from illiquid products. That's why I don't trade palladium. For example, I know a few people out there, they trade palladium and platinum and all that sort of stuff. But it's so illiquid and the spreads are so wide because of that. That's why the spreads are wide, is because it's illiquid. Because the person buying's up there and the person selling's down there and there's no deals going on in between. It's the reason for it. That's why you get that. That's why I stay away from illiquid products, because they cost you money. They cost you money. If you get into the trade now and you sell it immediately, it's going to cost you a lot of money. That's not worth it. Stay with the liquid stuff. You know, I'd say trade everything. What a hypocrite I am. I say trade everything, and then I say stay away from penny stocks and look for liquid stocks. But, guys, that's logical, guys. You know, look for stuff that's decent. You know, if orange peels are liquid, trade them. If they're not liquid, leave them alone. Don't trade them, eat them. Great British Pound, I think, is good buy. Have a look, maybe. Euro Great British Pound is a good buy. Euro Great British Pound. I haven't looked at that for a while. Actually, I did have it over here. That's Euro US dollar. Thought I'd put it on. That's the NASDAQ. Okay, let me just go to Euro Great British Pound. Obviously, my little man fell over. I've got a little green man here. This guy, see, my little green man. It's my lucky little green man. Okay, Euro Great British Pound. Dum 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 dum. There he is. Okay, let's put him on this chart and just have a look at him. I haven't looked at him for a couple of days. And so Lancelot, you say you want to buy. Okay, that happened to me once with a smaller gold company. Tried to sell my 10,000 shares and the daily trade volume was around 40,000. Exactly that, Nick. I learned my lesson many years ago, and that's why I stay away from penny shares. I'm really learned my lesson. It's cost me money in the past. And you think, oh, look at that, it's gone so well, and then you try and get out of the trade and you're stuck with it. Oh, goodness me. All right, sorry guys, Euro Great British Pound. Euro Great British Pound looking for a buy. So there's my levels on the Euro Great British Pound. The levels are in. And why does my little man keep falling over, man? Geez, stay there. Okay, so we've got our support level. And we've got our resistance level, which could move up a little bit, couldn't it? Right. Okay. I probably drew it there because of past history and because of 3 points and that sort of thing. That's just, yep, there you go. So there's a level there. Interesting level. There you go. That's actually a good level. Okay. There you go. Euro Great British Pound, your levels are in. Now, my concern, okay, that I'm going to move out because that has changed. We've traded this the other day. I'm just going to move this around. Just get a level here. Okay, I'm just going to take away this little blocky because we're not using it anymore. Okay, just see what we have here. What I'm seeing is you have an interesting point here where it's bouncing off the trend support and moving to the upside. So what I would do to get this trade, to take this trade, is I'd draw another trend in, short-term trend, and just wait for it to break through there and then take the long trade. It just gives you more confidence as to where it's going. Because at the moment, if I take these two yellow lines away, I just take them out the way, you're sitting between this level here, and at the moment it's bearish and it's coming down towards the support. There's still a gap to the support. So if I take those two lines away, then suddenly it's coming down to the support and hitting the support. What's holding you up and keeping you instead is this nice trend support line here, which is telling you, yeah, you could go long and you could go from here, but it's the only information you've got. So I'll just add a little bit more information in over here and say, well, maybe I should just wait and see if it breaks through that. It gives me sort of confluence to the upside on the Euro Great British Pound. So that's what I would look for there. Also, the next thing you could look for as well, just to give you even more confidence on your trade and say, well, is it a good trade or not? And you don't want to put too much into it and you do want to keep it simple, but you also want to make sure that you're kind of right. And I would just put that in there as well and say, well, if it breaks past that line, which is a prior high, that will also give me more confidence as it's going to the upside. So just give yourself that as well. Just let it break past those highs. You see 3 times, I'm just going to make that bigger. Over here, 4 times. 1, 2, 3, 4 times. It's hit that price level and come down. Doesn't want to break past that right now. So if it breaks past that level and breaks through that level, then you've got a nice long trade going to the upside. So just give it that, and then you can take it from there. Otherwise, you might be getting in a little bit too early. Not to say that it's not a bad trade, a bad trade or anything, but maybe it's good just to get a little bit of confidence here. There has just been a little bit of CPI out, a little bit of volatility, a little bit of movement in the market either way. I know it's Euro Great British Pound and not the US dollar, but there is still an effect, and it could be having effects there. So let everything settle down and then have another look at it. Not the worst trade in the world, but give it time. Use one if you're trying to reach me. It's in the chat. Sorry, getting tired. It's almost 11 p.m. here. It's only 11 p.m., Shane. Only people my age should be in bed by 11 p.m. No, it definitely isn't. My email address is working well. Johan Wonderberg, Shane, contact details. I've got your email, Blue Mango. I actually got it, and I'm going to send it back to you now. I don't know why it sent you that strange disabled message, but I've actually got your email here. So yeah, here we go. Shane Zimmerman contact details. Okay. Let me reply with Shane's email address. I do have it here somewhere. Where are you? Going to find you. And there you are. Shane, you haven't sent me an email for a long time, man. I saw your name there now. I just got to find it. There you go. There you go. Copy. Right. So I'm sending you an email back now. Boom, 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 boom. Reply. And I'm typing to you. And here is the email. Cheers. I wonder why. Why am I struggling? Hopefully. Well, that's weird. Okay, I'm gonna send it like that. Weird. Okay, there you go. Coming through to you. Let me know if you get it back. You should get it back. There you go. It's gone. Okay. I just replied to you now, so you got the email back now. You should have it, and it should be just great. Boom boom. Use 1 2 2 2 2. Your day starts at 3 a.m. Goodness me. You're one of those old guys that gets up when it's still dawn. Gets up at the crack of dawn. Yeah. Yeah, there you go. Got it. Done. See, easy. Why did it send you a message back that the email's been disabled? That is the weirdest thing. And I just sent you the email back, so looks like it's working. Oh, goodness. Yeah, you never know with Gmail, I suppose. Maybe something's going on in the background. I'll tell you what, one thing I hate, the Microsoft updates. Oh, goodness me. Drive me insane. So in the morning, I actually make sure I switch the computers on early while I'm making coffee and all the rest of it, because otherwise, I tell you, this morning there was an update and it took forever to start up. I tell you what, updating. Ah, goodness me. I much prefer the Apple products for that. And I've got a few Apple products, and those are so much better. They update during the night and they're on in the morning, no problem. But I got to say, that Microsoft stuff, when it wants to update, it can drive you completely insane. I've actually got preparation for that, because, you can't be getting to your charts in the morning. And you've got the phone, but that's really not going to help you a lot. It's too small and all that. You can't be getting to your business and your charts and your trading and all that sort of thing, and you can't get the computers up and running, and you want to take trades, or you want to look at your research or whatever, and you can't even get in. It's crazy, absolutely crazy. So I make sure that I'm up really early, and then I start the things up, go and have coffee, and then come and make sure everything is working. So this Euro Great British Pound, you're looking for a trade on that, not happening yet. Long story. I make a Renko algo for the fun of it. I'm going to put it on my simulated trading account to see how it does. Good show, Nick. Give it a show. Give it a go. But I don't like Renko. I must say, I just don't like it. I prefer to look at the original candles and see what it really did. Give me a bit of information, because I kind of read charts like a book. I don't, it doesn't take me long to spot things. And I'm looking at the extensions, and I'm looking at the buyers and sellers coming back into the market, and I'm looking at, there was news in the market, there's undecided, all these things I can read on these candles. And then you go and put Renko there, and I'm like, oh, it's just, might as well put a line chart on. So no, I'm not big into it. Not a big fan of it, but okay, give it a go. Build an algo, do a thing, and see how it works. Yeah, that just proves a point, by the way. What Nick is doing there just proves a point that the market is not made up of algos. It's made up of people like Nick who make the algos and then run the algos in the background, which means there's a human being behind the algo with his method and system running behind the scenes, working the algo. And so you are still trading against a human being at the end of the day. And there is still someone ultimately that's trying to make money out of the market with that algorithm that's running in the background. Make sense? Totally. The only reason people actually would have built algos is, for one, so they don't have to sit in front of the computer and take the trades. And for two, so that they take the psychology out of their trading. So they're not sort of locked in with the psychology. They kind of, it's taking the trades for them. They're not getting sucked in by, oh, it's losing now, maybe I should get out, or oh, it's winning big, let me get out now. It's doing what it's supposed to do, which will give you that. So if you build an algo into your strategy, so you have a system, the price action system or any system, you build an algo into it, and you build it to do exactly what you want it to do with stop loss, take profit, that sort of thing, then you could make it work for you, because it takes out that perfect scenario of psychology and fear and patience and that sort of thing. You could literally walk away and let it take trades for you. Particularly helpful on lower time frames. For example, 5-minute time frames. If you're trading on 5-minute or 1-minute time frames, and you've got an algo doing it automatically for you, then that algo can automatically throw your stop loss in, throw your take profit in, take the trade in an instant, where you would like take a few minutes to get it sorted out. And by the time you got it sorted out, it's already, trying to take profit and that sort of thing. So yeah, it does appear that the volatility has moved markets around a bit, and it appears that the S&P is trying to go long. Does look like it. Looks like it wants to go up. Okay, yeah. Best way to use algos for Nick is to use it as a money management tool. I get that. That's good. And if you can use it as a money management tool, that's a good way to use it. It takes the psychology out of it. It manages the money, and it works for you. It's great. I kind of don't need the algos anymore because I swing trade, position trade, and also my psyche is different, so it doesn't bother me, at all. In the old days, if I saw a bit of red on my chart, or I saw a bit of red on the income or whatnot, I'd be freaking out, panicking almost, and sweating, and oh, I'm losing. But these days, I know I'm going to lose some, and it doesn't worry me at all, because I know there's a bigger win at the end of the day. And once you understand that, it doesn't really bother you that much. But yeah, the algos do help, specifically for guys that struggle with that. It helps a lot because it takes the trades no matter what. The downside to the algos, of course, is it can't see CPI data, and unless you somehow program it in. It can't see Donald Trump stand up and say something silly. It can't see if something breaks out in the background or something happens. So that's the downside to an algo. But as long as you've got the money management in place for the algo, then you should be okay. The problem with that is it'll run to the full loss. So for example, if you've programmed it to lose $250 on every trade, worst case scenario, and things go wrong in the world, it'll run and it'll take all your trades out at $250. Whereas if you saw something coming, you'd be able to start managing it earlier and maybe save a bit of money. But yeah, no, it works for that. It takes out the fear factor. It takes out the mistakes that we make. I tell you, it's amazing how this Brent crude oil just doesn't want to go up. Doesn't want to do its thing, but it's okay. We shall wait. Interesting is this Nikkei. I wonder why it is doing that. It's just, that's the Spain. Look at that. What is going on with the Nikkei? That's weird. Have they now? I wonder if they've done something on their side and put a new cut. No, there you go. What's going on here? There's the 1 hour. Okay, that looks fine. Sometimes I know on the cash account, sometimes they just put a new contract out and but yeah, it's only on the 4 hour. How's that? Only on the 4 hour. That's the weirdest thing. Okay. Let's see if I can get it all back. Seems to have gone insane. All right. Brilliant. I'll just put something else on here, like the UK 100, the FTSE. But I love your FTSE. Even the FTSE is still showing bullish. For a long time, the UK 100 and the FTSE was running in a range. Man, it just stayed in that range. And it never went out of that range. Lately, it's been quite bullish. It's been doing quite well. It's been quite a nice little trade, actually. Not bad at all. And it has now broken to the upside. Will it break to the downside? I don't know. We'll see. We'll see how it goes. Two breaks past that prior high and keeps on going up. Like I said, guys, these indexes, I'm getting a terribly interesting gut feel that something's going to go wrong. I'm just not comfortable. Here's the DAX. The DAX is stuck around this level. Looks like it wants to go up, but I'm waiting for it to take out this level here. Because that might, take that sort of money and just bring it down a bit. It's just sitting at this level at the moment, which is unusual for the DAX as well. Very unusual for the DAX. Right, it's true. It was like that. I wonder if gold is now going to head on, keep on going. I'm still convinced. I've still got this strange little feeling, this nagging feeling that the S&P 500 is going to come tumbling down. I don't know what it is. Wow, if I'm wrong, it's really going to go, isn't it? It's going to go to 7,000. I did call that it's going to go to 6,600 this year. And it's so close. I wonder if it's going to hit that level because the market likes round figures. You guys do know that traders like round figures, right? If you're picking a number, always pick a round number because 9 times out of 10, human beings do not look at the number 6537.1. They look at the number 6,600. That's the number. Looking for those round numbers always. That's where the numbers are. So if you're drawing levels in, you can draw them like this, but bear in mind there's probably somewhere down the line it's a round number that it's going to hit. Because when it gets to that number, then everybody starts selling or buying or whatever the case and moves things around. I'm just thinking that this S&P 500 might just go all the way up and then come popping down. Interesting, though. Interesting. If you were to look at the fib extensions, it will probably show you all the way up past the 6,600. Interesting. If you bought it here, let's do that. Just out of interest, I'm going to do a Shane here and draw a fib extension in. And I'll mess that up slightly, but I just want to see. No, 6,600 is it? Do you see that, Shane? 6,600 is it. That's the level. 6,567. I did mess it up a little bit. Yeah, I should actually just make it there. And yeah, it would actually, even on this, show you around 6,600. So That's the level. That's the level it's heading for. So it's probably going to go to 6,600, which was very poor risk to reward if you're trading long here. And then it's going to correct, and I think it'll correct all the way back down to the 6,200, to be fair. It's due for a correction. It's due for a big correction, and I'm waiting for it. I'm going to be patient and wait for it. I'm not going to get overexcited about these markets. And I actually think that when that happens, the United States dollar, South African rand is going to turn around and go the other way. Brent crude oil is going to turn around and go the other way. And I think gold is also going to turn around, probably go the other way. So Bitcoin's an interesting one today. Look at this. It's sort of coming back to retest here. And I wonder if it's going to give a nice long trade out of here. Because there's the level. It's broken through and it's coming back and it's retesting that level. Might get a green going up. It will go up to the 120 level again. So I think it's actually quite a nice trade, to be fair. Looking quite distant. This is gone. This is pretty much over. So we can remove that. And you could put another sort of trend. Let's just do this. It was easier if you do it that way around. And yeah, it looks like it might. Bitcoin might actually bounce off of here. Where's ETH? Boom. Let's just have a look here. Interesting. ETH is also breaking to the upside in an interesting way. ETH more interesting than Bitcoin because it's actually breaking structure here. If you take that, which is an old line, and I'll just move it around a bit. We'll just move things around a bit, just change things around a little bit. And sometimes they do tend to break through levels. Just look at that. Yeah, that does seem to be moving up, doesn't it? That's ETH. And then Bitcoin is just going to give me a headache there with that graph. There we go. I think it's actually going to bounce here and start going up. That's interesting. But that said, crypto's not got much to do with the S&P 500, although they do sometimes run together. But I think the S&P 500 is going to correct. Bitcoin maybe not so much. Yeah, I'm still waiting. We shall see. Short gold, Rob, not financial or trading advice. The wording is, nothing that I say here constitutes financial advice. Interesting that we have to say that because some people will think it's financial advice. But also, I'm not supposed to give you guys financial advice, let's be fair. I'm not the financial advisor. But yeah, I can show you how to trade. Nothing wrong with that. Gold short. Gold, I think it'll come down into this level maybe bounce off here and then go long again. But it's very bullish, eh? Super, super bullish. But in the long run, if the S&P comes down, I think this will also fall over. Interesting thing to note, and this is something that I haven't shown you guys in charting, is you get these movements up, right? And then you get this like rollover. It's not even a flag pattern or anything like that. It's just rolling over. And I always look at that like weight. There's a bit of weight on the chart. So it's waiting. And if you put a lot of weight on the end of a pole, it starts to fall over. And when it falls over, it comes tumbling down. And, you can just sort of draw the picture in your mind of this coming all the way back down to that line there. Pretty much how you look at things. But that line must actually come out, go up to there. And that line can stay there. And that gives you the level of where we are. And it's hit there, so it's rolling over. Good chance it could roll over and come all the way down. Then it'll come all the way down to here. That's quite interesting, actually. That's the same, on the S&P, it's not rolling over yet. It's still going up on a nice straight line. If it starts rolling over, starts falling over here, starts rolling over, it'll be interesting. You see it coming down. See it coming down big time. At the moment, it's long-term long, but you know what, Shane? I'm beginning to wonder if it is long-term long. I'm beginning to look at it and think it's rolling. And you know, when these things roll like this, there's always that off chance that it's not going to continue on. It's going to roll, and it's going to roll down. And if it rolls down, it's going to probably come back and clean up this whole area here back down to the lower levels here. So it might roll down. And if that's going to roll down, and the S&P is going to roll down, the UK is going to roll down, the DAX is going to roll down, it's all going to roll down, and the dollar will go the other way. And the reason I'm thinking the dollar is going to turn around and eventually go the other way is because I look at this and I look at this curvature of the dollar, and it just seems to be wanting to sort of turn around and do the other thing, go the other way. It looks like it wants to curve around as well. So if that's curving around, there's a good chance that the other stuff's going to curve around as well. I'm reloading the news to see inflation picks up in August, complicating the Fed's path. Oh dear. Americans don't buy Trump's message on inflation. Tech stocks are doing so well, investors are starting to worry. Well, you should be worried, because that's exactly the gut feel that I've got. Tough job market hits young workers the hardest. You guys have no idea what unemployment is. ECB holds interest rates at 2%. I guess the guys were expecting a cut in interest rates and they didn't get it. I don't know. But the Fed is poised to cut. So that's actually quite interesting as well. Will they cut? Won't they cut? We'll see. It'll be interesting. We'll see if they do or not. So it looks like the UK 100 is starting to take a bit of a drop here. There as well. That would be interesting. See what you can do as well if you get this sort of scenario. There's your trend support. And there's also a level here where there's a lot of money lying. So you can expect that to come down into that level, maybe take some money and go. So this could go a little bit short as well. Yeah, the whispers of the US dollar crash is what I was talking about on Tuesday, Shane. You know, my concern on the US dollar crash, well, one of my concerns is my short on the United States, my long on the United States dollar South African Rand, because that'll make the South African Rand insanely strong, which I don't really want. But the whispers of the US dollar crash are a problem, because if the US dollar does crash, if the US dollar decides to go falling down into the pits of hell, then we will get that commodity super cycle, which means gold will go long. Gold will go long for a long time, and so will all those other ones. But what will happen elsewhere? You know, the inflation is going to go insane. So there's a big thing here, and that is, how good is the Fed? Will they hold the dollar up? Will they be able to curb inflation? Because inflation becomes a really big issue. So yeah, it's interesting. It's interesting, and the whispers, but be careful of the whispers, because you know what the whispers do? The whispers go out there to try and get people like you and me to do something silly like short the dollar. Because they tell you, hey, dollar's going to go down. And you think, ooh, the dollar's going to go down. They said so. And then just when you get in and they get everybody all sucked into it, they switch it around and they nail you, which is why I'm concerned about this S&P 500 at the moment. It's because exactly that. I just got the feeling that they're sucking everybody in here. Everybody's getting sucked into this and thinking, I'm going long, I'm just buying. You know, that we're at the point now where traders are buying blindly. We're buying because it's just going up. I've seen this before. We're just buying. It doesn't matter where it is. We're just buying. We're buying because it can never go down. And that's the psychology. It can never go down. It'll always just keep going up. So we're just going to buy, and we're going to buy, and we're going to buy. They're sucking everyone in. And somewhere down the line, somebody somewhere is going to make a lot of money on a big short. What was that guy's name? The Big Short? No, something's going to go down here. I'm telling you guys now, something's going to go down here. I can't see this continuing like this. I just get the feeling that everybody's getting sucked into this, and they're going to get a big surprise. The surprise is coming. So if you're not managing your risk and you're not following the strategy and you're not doing it right, you're going to lose more than $250 or $2,500 or whatever it is you're risking. And it's going to take you to the pits down the bottom there. You see what happens when this starts going down? This is the interesting point, the psychology of it. And I've been there a few times. I've lived a couple of crashes, right? And every single time there's a big move down or a big correction down in the S&P 500, the UK 500, the DAX or whichever other index, what normally happens is your psychology is so propaganded into believing that it can't go down, that when you see it going down, you think, it's correcting slightly. It's just a small correction. It'll be okay. And then the next day it corrects a little bit more and you think, it's still part of the correction. It'll be okay. And then it just gets worse and it gets worse and it gets worse and it just falls, okay? That's the problem. And if you don't have a stop loss in place, all those profits that you made from that point to that point are going to go down the toilet. You've got to control the losses. You've got to watch the market and understand that if it's going past that point, it's going past that point. There's nothing you can do to stop it. No matter how much you believe that shouldn't be happening, guess what? It's happening. And just believe it. So manage those stop losses and don't sit in the S&P 500 going, it shouldn't be going far. And if I get out now, it's just going to go back up again, which in some cases it does. Don't make that mistake. Rather get out and get back in if you need to, but don't fool yourself. So many times I've seen it. What did it get up to a few years ago? Was it 4,500 or 5,000? And there as well, even there, and that wasn't even a crash, where it dropped all the way to 3.5 again. These things can surprise you. They can surprise you faster than you can believe anything. And you'll sit there looking at it. You'll sit there watching it, thinking it's just a small correction. Just keep watching it. You're actually watching it take your money. It's just pure psychology. Michael Burry, thanks. Yeah, that's the name. I actually watched the movie. Enjoyed it thoroughly. Good movie. That and The Wolf of Wall Street. What a great movie. Of course, we're traders. Of course, we're going to watch those movies. Why wouldn't we? I just couldn't remember his name, Malcolm, but Michael Burry, yeah, fantastic. He's still around, by the way, and I believe he's shorting again. But I heard, I don't know, it's a while ago, he was already shorting again, the big short. He's doing it again. Yeah. And watch out, yeah, like Shane says, always trade against the tech whisperers. Watch out for those tech whisperers. Yeah, those guys calling a trade are dangerous, eh? Yeah. But oddly enough, Jordan Belford, Wolf of Wall Street, Jordan Belford came out and he was discussing crypto. And he's actually got the same feeling as me on crypto. I was actually quite surprised that crypto is basically built on fresh share. It's very dangerous. It's a great product to trade. I mean, you can trade it. It's very volatile. It makes you good money and you can trade it well. But investing in it is insanely dangerous. It's actually better to invest in shares, knowing that you've got some asset value. But there's no asset value in crypto that we can find. And blockchain technology is built on some kind of fantasy. So, yeah, I was actually quite interested to hear that he's actually got a very similar point of view to me. Not only him, but Jamie Dimon, the guy who runs not Morgan Stanley. It is Morgan Stanley, isn't it? Yeah, it might be. Yeah, he also feels the same way. I don't know, it's weird. Interesting. But yeah, that's how people think. That's how people talk. But it's always great to watch the trading videos. I love it, you know. And then the wife has to watch it with me. Perfect. There hasn't been many, though. There hasn't been a lot, has there? There are not a lot of those. Very few and far between. Certainly very few and far between. Euro, Great British Pound. Yes, he or she who called it long. Here you go. Here you go. It's breaking to the upside. Breaking to the upside. Keep an eye on it. Seems to be on the go. It's on the move. There's the line. And but it's struggling again. Look at that. Doesn't want to go. Just wait for the green candle to close above that. And then you could probably grab your trade. You don't have to wait for it to get through that trend. If it goes past that prior high, it'll probably be a good trade. Probably be okay. If it breaks through that, even better. But yeah, if you get a nice green candle above that closes, then maybe you can get a good idea that it's going to go to the upside. It's going to move in that direction. So that'll be a decent run. Yeah, maybe worth something. Maybe worth having a look at that one and staying with it. Not bad at all. Not bad at all. Yeah, I'm sure I can close the email now because there we go. Yeah. I suppose Gmail's got its own funny little quirks or whatever the case that give you hassles from time to time. So lunch a lot. That was you. Okay, you're waiting. Yeah, let's wait. You just need that green candle to confirm, and then you can go. There's still a lot of space to the upside there if you take the trade there. If you look at it, it looks pretty reasonable, even if you take the trade from there. When you've got all that, you can put the stop loss below there, and you could even put the stop loss below there, and you've still got a reasonable risk to reward. So not bad at all. I think that'll be a decent trade. Let's just remove that. I think that'll be a decent trade. Not too bad at all. Maybe I would put my risk below here. I wouldn't even bother going this far down because you could. But, I mean, if it gets below this, it's probably going short anyway. So maybe just dump it here if it goes down. And if it goes long, try and grab the long side. And you get more reward. What do you think is a good short target on gold? 3600 or 3578? Computer says no. Okay, short target as in a place to buy it short. In other words, to start your trade, right? So you want to get into a trade at that level. So what you got to do here is, you see 3675 is my level, right? And then, okay, let's just be fair here, okay? You don't want to get short just yet. So what I would say is if it breaks up to this resistance and breaks to the upside, it's going long. If it breaks to the downside and it gets to this 3580, then I'll start looking at a short because it's breaking to the downside. If it's in this level, it could still turn around and go long because this is money and there's lots of orders lying here. So I could take this money and bounce and go long. So be careful of that. And it's still in structure. And there goes my little man again. Get back up there, you wee bugger. Okay. Oh, he doesn't like staying up today. But like I say, so what you really got to do is wait for a red candle to be below that level. So you're probably looking more at 3570, 3560, 3550 even before you get into a trade here with it going all the way down to these levels at the bottom here. But it's not the worst trade on earth. If you look at this, if we look at a short position, the short position from there with a target down to there and a stop loss above that level there, it's still a good risk to reward because if you're taking a short at 3560, then your stop loss is up at 37, which is really high. And the red candle is down here and it'll probably in all likelihood come all the way down to this red level here. I actually would take this level out. You don't need that. That's actually rubbish. And that is your level. It breaks through that. Then your level purchase is here and then all the way down to 33. That will be the short trade on gold if you're looking for a short trade. Either that or it's going to be bouncing down from higher levels, but then you've only got a short distance. I would say if it breaks up, it'll break up past that level. So yeah, and this is like the prior low as well. If you look at it, 35.84 is the prior low. You don't want to buy it at the prior low. You want it to break through the prior low. So you want it to break past the prior low and give you a candle below the prior low, which means you're probably going to get in at 35.60, 35.64, 35.50. You're going to get in a lower amount. Unfortunately, that's just the way it is. You can't really take it at 35.84 because that's the low. And if it's sitting there, it could still go back up again. So that's your trade. Okay, yes, try 2-to-1 restoration. No take profit level. I've been short at 36.49, 36.12 short, 35.99. That's very short period there, Shane. Been short at 36.49, 36.49. Yeah, that's good. That's good. That's basically the top level. So you could be short there. It's early doors, but if you do get a short there, it'll go down. Very 50-50 there because there is a chance that it could still go up from there. But I agree with you. If you wanted to quickly get in a 50-50 trade, you felt it's going short, you can take it there, manage the trade with a view to it going down. You might do well. Okay. Just remember, guys, if you take a trade because you feel like it's going to work out, you're never wrong. Every single trade that you take is never wrong. Every trade you take is right. All you have to do is manage it. That's all you got to do. So it's not wrong if you took the trade there, or if you took the trade there, or if you took the trade there. Every single trade is right. It's just a question of how you manage it. And if it goes against you, if you manage it correctly, it doesn't matter. It really doesn't matter. You just have to manage it correctly. That's all you have to do with every trade. You're not going to get every trade right. It's impossible. Nobody's going to get every single trade the right way around because it's 50-50. We all know that. And it's just a question of managing the trade. I mean, if this trade is going against me, does that mean I'm completely wrong? Or no, I took the trade, I'm managing the trade, and if it goes to my stop loss, then I'm out of there. Tough luck. I have to accept it. I have to accept that I'm wrong. That's it. It's not going to change anything. The fact that you're wrong. Just live with it, deal with it. Nothing else you can do, you know? So if you choose an entry point on your trade, don't expect it to always be perfect. Don't expect it to always work out. Sometimes it won't work out. Sometimes it will. I mean, for example, now, if we were to take this Euro Great British Pound right here, because we felt like it's going to go up, that doesn't mean you're wrong. It just means you have to manage the trade correctly against how you're taking the trade at this particular point and why you're taking the trade at this particular point. Where would I put my stop loss if I took the trade at this particular point? And it doesn't mean you're wrong. It just means you have to manage it. That's all. Because you've got a gut feel that it's going to go that way. That's fine. With experience, you'll get a lot of those. A lot of people will say, you can't take a trade on gut feel. Yes, you can. Because you know why? Because you've seen it all before. And sometimes the gut feelings are telling you what's happened before. Because it's all up here. I might not always be right, but I'm never wrong. That's precisely it, actually. Because if you manage it correctly, you're never wrong. I view technical analysis as risk management strategy. That's basically, Shane, that's basically what technical analysis is. And that is the aha moment. Shane's hit the nail on the head. And that is, you know, as I've said to you, and the title of this video even is, charts can't make you money. Charts can't predict the future, neither can you. But charts are a risk management strategy. They are a strategy. That's what they are. They're a system to give you the ability to use your strategy to make the money. Because if you didn't have the charts, it would be very difficult to manage this strategy, wouldn't it? Because you create a strategy and you say, this is my plan for this trade. My plan for this trade is to take the short there, manage it down to there, to take the profit, and my risk is up there. I've now managed my risk. I've got a target. Everything is in place. This is not a 1,000-page business plan. This is a 3-step business plan. It's like, I've got my plan. I'm not just going into this trade with blind eyes thinking, I'll just go into this and see what happens. I'm going in there with a view to, this is where I want to take the trade. This is where I want the trade to go. And this is what happens if it goes the wrong way. Now you've got a plan. That's what a chart does for you. It gives you that risk management strategy. And it just makes it more difficult to apply a strategy on these numbers here, on depth and that sort of thing. Trading on this side, it's just numbers. And numbers can be quite meaningless. So a chart gives you a view. It gives you a point of view. It gives you an area where you can work in. And it just makes it easier for you to trade with. And you kind of look at historical values so that you can work this out. And like we said earlier, it obviously makes you more comfortable when you're taking the trade. When you take the trade, you think, that'll work for me because I feel good about it. And that's as easy as it gets. You feel confident about your trade. You can manage the trade. You can follow the trade. You can draw a few pictures around it, and you can see where it might go, where it might not go. It makes an insane difference to your trading. But to expect it to do exactly what you want it to, that unfortunately is not going to work. We all would like that. I mean, I know that. I would like to just say, every time I take a trade, I would like it to do that. Wouldn't that be wonderful? Wouldn't that be wonderful? So here's another trade, guys. The United States dollar, Canadian dollar. As somebody who commented earlier said, the loony. And, okay, so is that short or long? It's short. Okay, perfect. Right. A stop loss somewhere up there. Yeah, you'd probably put the stop loss there, wouldn't you? Nice short trade. Here we go short when it crosses this level here. Yeah, I think it needs to come down a bit, actually. How's the risk to reward there? It's not perfect, but I think if it gets down to this level, you can bring the risk right down, actually. To about there. Yeah. Not too bad. Good one to keep an eye on, United States dollar, Canadian dollar. But it does need to come down to that level a little bit, come into that level a little bit, and then we can start taking a trade there. So that one looks decent. Have I drawn in the Euro Great British Pound? I should need to draw that one in as well. On a long position, so we're looking for a long position on that. I'm going to draw that in so we can see if it goes into that. And we can take that trade. Let's do it like that. Yeah, not bad. Okay, so if that one comes about, we'll take that one as well. We'll just see if it works out or not. That looks like a decent trade as well. So I'm getting ready for these trades now, so we can take these trades. Quite nice. Okay, guys. Been a wonderful day. I think I'm going to be on my way, actually. I'm going to hit the road. Boom, 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 boom. Is it Thursday already? Can you believe it? Thursday already. Tomorrow's Friday. And then it's weekend. Aha! Guys, don't forget to come back and watch tomorrow's video, which is all about RSI. And then I'm going to hit the road, and I'm going to thank you guys for being here. It's been exciting, as usual. It's always good to have you guys here. It's always good to have a bit of fun. It's always good to chat to you guys. But it is time for me to go and do my thing and head on. I want to thank you guys for watching. I want you to keep your feet on the ground, reach for the sky, and I want you to come back on Tuesday, and we carry on from where we left off and talk a little bit more. Cheers, and I want you guys to go Boca. Yes, I will be watching the Boca, that's for sure. I'll totally be watching the Boca. But I want to thank you guys for being here, and I'll chat to you guys soon. Have a great weekend. Enjoy, and until the weekend,